Welcome back to the channel. I'm Algabot, and today we're taking a close look at a MetaTrader 5 expert advisor called Climax Bar Reversal. This is a pure price action strategy, which means there are no moving averages, no oscillators, and no indicators of any kind driving its decisions. Instead, it reads raw candle geometry to spot the moment a trend exhausts itself, and then it fades that exhaustion. By the end of this video, you'll understand exactly how it detects a climax bar, how it confirms a reversal before entering, and how it places its stop loss and take profit. Let's get started. So what does this expert advisor actually do? Climax Bar Reversal is built around a simple but powerful observation about market behavior. Near the end of a strong move, you often get one final candle where the crowd capitulates or piles in at the worst possible price. A buying climax is when buyers chase a market to a fresh high with one huge bar, and a selling climax is when sellers dump into a fresh low with one huge bar. Both represent emotional, exhausted participation, and both tend to be followed by a snapback in the other direction. The strategy hunts for exactly that. It measures the range of each closed candle and compares it against the recent average range. When a single bar is abnormally wide, by default at least 2 times the average, and that bar also prints a fresh local high or low, the EA flags it as a suspected climax. Crucially, it does not trade the climax bar itself. That would be jumping in front of a freight train. Instead, it waits for the very next bar to fail. If that next bar cannot extend the move and closes back against the climax, the strategy treats the exhaustion as confirmed and it fades the move. Because everything is derived from raw bar highs, lows, opens, and closes, this EA works on any instrument and any time frame you choose to test it on, from forex pairs like Eurodollar to gold or indices. It is best understood as a counter-trend, mean-reversion tool. It is looking to sell into overextended rallies and buy into overextended sell-offs, rather than ride a trend. This style suits traders who are comfortable trading against the immediate momentum and who appreciate clearly defined, structural risk. Remember, this is for educational purposes only and is not financial advice. We are studying how the logic works, not making any promise about results. Let's walk through the exact logic step by step. The EA evaluates only once per newly closed bar, so it is patient and never reacts to a half-formed candle. On each new bar, it looks at 3 things: the climax candle 2 bars back, the confirmation candle 1 bar back, and a window of bars beneath them. First, it measures the range of the suspected climax bar, that is its high minus its low. Then it averages the ranges of the previous 14 bars by default, using the range period setting. For the bar to even be considered a climax, its range must be at least the climax multiple times that average. With the default of 2, the candle has to be twice as tall as normal. This is the abnormality filter. Second, the strategy detects whether that bar made a fresh local extreme. Looking back over the LookbackBars window, 12 by default, it checks that no earlier high exceeded the climax high for a buying climax, or that no earlier low undercut the climax low for a selling climax. The climax must sit at the edge of recent price. Third, it demands a genuine thrust. The close push percentage requires the climax bar to close strongly into its own extreme. For a buying climax, the close must sit near the high, and for a selling climax, it must sit near the low. This rejects indecisive doji-style candles that are wide but hollow. Fourth comes confirmation, and this is what keeps the EA out of trouble. For a buying climax, the next bar must fail to make a higher high and must close back below the climax close. For a selling climax, the next bar must fail to make a lower low and must close back above the climax close. Only when the move stalls and reverses does the strategy act. When all of those line up, the EA fades. A confirmed buying climax triggers a sell, and a confirmed selling climax triggers a buy. The stop loss is placed just beyond the climax extreme, with a small buffer set by the stop buffer percentage, so risk is structural and price-derived. The take profit is then projected as the reward-to-risk multiple of that stop distance, 2 times by default. The EA holds one position at a time, and the stop and target manage the exit from there. Let's read through the actual MetaQuotes language code on screen, just as you'd see it in MetaEditor. At the top are the input parameters, and these are the dials you can tune. LookbackBars controls how far back the strategy looks to confirm a fresh local extreme. A larger value demands a more significant high or low. Range period sets how many bars feed the average range calculation. Climax multiple is the heart of the filter. Raise it, and only the most violent, oversized candles qualify. Lower it, and the EA becomes more sensitive. Close push percentage governs how decisively the climax must close into its extreme, filtering out hollow candles. Reward risk sets the take-profit distance as a multiple of risk, and stop buffer percentage adds a little cushion beyond the extreme for the stop. Next, look at the single guard line. It compares the climax bar's range against the climax multiple times the average range, and if the bar isn't wide enough, the function simply returns and does nothing. That one check is the abnormality gate. Below that is the buying climax block, which reads the candle values we already captured. It confirms the bar sits at a local high, that it closed up and pushed strongly into that high, and then that the confirmation bar failed to extend higher and closed back below the climax close. When every condition is true, the EA reads the current bid as the entry, sets the stop just above the climax high plus the buffer, and computes the take profit by projecting the reward to risk multiple downward. Finally, it sends a sell order. The selling climax block, not shown here, is a mirror image that buys instead. Let's watch the strategy trade through this illustration. The lower panel here isn't a traditional indicator. It is the actual engine of the strategy, plotting each bar's range as a multiple of the recent average. The dashed line at 2 is our climax threshold. Watch how most candles sit well below it, while 2 bars spike dramatically above it into the red climax zone. Price is sliding lower on the left. Then, at the 4th candle, a huge down bar slams to a fresh low and its range bar leaps to almost 3 times average. That's a selling climax. Notice the strategy does not buy there. It waits. The very next candle fails to make a lower low and closes back up, confirming exhaustion, and that is where the buy entry fires. The stop sits just below that climax low, and the target is projected at twice the risk above. Price then climbs steadily, candle after candle, until it reaches the take profit level around 1.0889, and the long trade is closed in profit. Now momentum carries higher, and watch the range panel again. At the 10th candle, an enormous up bar surges to a fresh high, and its range spikes back into the climax zone, this time a buying climax. Again, the EA holds fire on the climax itself. The next candle fails to push higher and closes back down, confirming the reversal, and the sell entry triggers. The stop rests just above that climax high, and the target is projected twice the risk below. Price rolls over and falls, reaching the take profit near 1.0874, closing the short. That's the full cycle, long and short. This is an educational illustration only and not a prediction of live results. And that's the Climax Bar Reversal Expert Advisor. We covered how it spots an abnormally wide-range climax candle at a fresh extreme, how it demands a strong thrust and then waits for the next bar to fail before fading the move, and how it builds its structural stop-loss and reward-based take-profit from pure price geometry. We also walk through the core MetaQuotes code and watch both a long and a short play out on the chart. Remember, everything here is for educational purposes only and is not financial advice. If you found this breakdown helpful, please hit that like button, subscribe for more MT5 strategy analyses, and drop a comment telling me which strategy you'd like me to dissect next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.